Welcome to Sectors Up Close. I'm Elena Casas. Today we're talking semiconductors and my guest is Keith Gangl, Portfolio Manager at Gradient Investments. Nvidia reports later this week in a moment of truth for Wall Street's artificial intelligence dreams. That stock has risen 46% since the 1st of January. Its $570 billion increase is more than triple the market value of Intel. This one company's gains account for more than a quarter of the S&P 500's rise this year. That's because its chips are seen as the gold standard in artificial intelligence. Traders are bracing for big moves in the company's stock following Wednesday's earnings, but which way will they go? Well, let's ask Keith Gangl of Gradient Investments. Keith, hi, thanks for joining us. Now, I know you own Nvidia and you are a big fan, but what are you expecting on Wednesday?
Yeah, we'll see what happens. It should be interesting. The last couple quarters, they've absolutely beat their numbers by very handily. They beat by $1.5 billion the quarter before, $2 billion on revenue. So this quarter, we're expecting about $4.60 in earnings, which is up fivefold from the previous year. Think about that, 90 cents all the way to 450. So that's fantastic growth. On the revenue side, we're looking for about 20 billion. So that's actually up threefold from a year ago. It's only 6 billion. So that's why the stock's done so well, because they've been growing so fast. Now the expectation, that's kind of where consensus is. But they actually have to beat that with the stock being up, well, you said 45, 46% year to date. They need to exceed that. And then if we look at history, they beat, like I said, by 2 billion and $1.5 billion. We'd like to see at least a $1 billion beat and then kind of a raise. So again, that's what we're looking for.
Are you saying then that so much money has gone into this one stock that anything other than a really impressive beat could mean it falls and people are disappointed?
Yeah, I think that could be the case in the short term, but I think, they've got a clear path to growth in the future. So if it does sell off, depending on what the numbers look like, that could be a buying opportunity for people that don't own the names. Again, stock's up 45%, so it needs to be a pure perfect quarter when they report, and they need to have upside and give good guidance. Otherwise, we could see a pullback. But again, that we'd probably use as a buying opportunity for people that are not in the stock.
How sustainable, though, is this level of semiconductor demand going forward?
Yeah, we think it's sustainable. AI, I think we're very at the early innings of it, so we think that's going to continue to grow rapidly. But can they maintain this 80% EPS growth, 60% revenue growth? We don't think so. We think that kind of plateaus in 2025, not this year. I think we still have the rapid growth. But even when it plateaus, we're talking 20, 25%, we think, because we're at the early innings. So we think that's a fantastic growth rate for the overall industry.
So how can investors spread their wealth a bit around the semiconductor sector away from this one company? Who else is a good bet?
We like AMD. They're kind of like a follower player with, same as Nvidia. They have the chipsets that go into AI, but they're a little bit behind, but they're in the early innings and they can play catch up. This company's done fantastically as well. They also have the PC exposure. So when PCs are starting to pick back up after the COVID kind of downturn, kind of reaccelerating, we think AMD is a good place to be. That's one of the names we like. There's another name, Broadcom, we like a lot. Again, they have a little bit of AI exposure, but they have, 80% of their business is semiconductors, but 20% is software. And that software generates a ton of free cash flow. That company's supposed to generate almost 24 billion in free cash flow next year. That's fantastic. That's up 30%. And another player we like is Lam Research. They actually build the equipment that makes these semiconductors. In 2022, we had the CHIPS Act in the U.S. to kind of move some more of the manufacturing of chips to the U.S., and Lam Research is definitely a beneficiary there.
Interesting you mentioned the CHIPS Act, because some efforts to move semiconductor manufacturing to the US have been struggling, haven't they, as chip makers have excess capacity after they increased production too much in response to the shortage during the pandemic. So what do you make of that?
Yes, that's certainly the case, but we're still going to be building. I think they have about $39 billion in grants, and I think that's going to get used. Their latest news that's been out is Intel's actually going to get about $10 billion of that, and they also have about $75 billion in guaranteed loans. They will use that money to build, and a direct beneficiary of that is Lam Research. Once you build these buildings, you have to put the equipment in it, and what kind of equipment you're going to use? The semiconductor equipment, and the leader there is Lam Research.
What about the trade issues here with China, where, of course, some of these companies have been blocked from exporting their chips to China, and there is a risk then that the Chinese manufacture their own versions, which could then be used around the world. Should this concern investors?
Yeah, it should concern a little bit. I mean, you saw it back, go back 6 months ago, that actually was a little bit of an impact on Nvidia. but obviously the AI demand is so much stronger around the rest of the world that they're still producing it, still getting premium pricing. So we do have to keep an eye on that because China's, getting a little more protective. The U.S. doesn't necessarily want to export that IP as well. So that is something that's going to be a slight headwind for the space, and it's something we have to watch. And that's part of the reason why the CHIPS Act and why getting U.S. manufacturing back here is very important for the U.S.
What would you advise then ahead of these key results this week? Buy more chip stocks now?
We say stay the course. If you own them, continue to own them. And again, Nvidia reports on Wednesday, so that will be a key driver for the overall space. And again, if the group sells off, the fundamentals still look bright, we'd use that as a buying opportunity. The space hasn't had a big move, so it's hard to jump in with fresh money at these levels. And we wait for a slight little pullback, which we wouldn't be surprised for the overall market to pull back a little bit. So that would be our buying opportunity. But we think when you look out, 6, 12 months, these are names you should be owning and buying.
Keith Gangl of Gradient Investments, thank you so much for that insight. And that's your roundup of the chip sector. I'm Elena Casas, and this is Reuters. Happy?